It's your boy Bitcoin Lunatic, and today we are back with a W video, a fire video, an inspirational video, a high frequency 2026 scalping strategy video. You know what I'm saying? This is the strategy that I will be using to trade all 2026, baby. Yes, sir. 2026, we ain't doing nothing but scalping. We're not really doing no long-term trading or no short-term trading. We're not holding positions for longer than an hour. You know what I'm saying? We straight scalping. We getting in, we getting out. The market's too bipolar for me, and the way that I am as a person, I'm impatient but simultaneously patient at the same time. So it's like I have to be a scalper, because it's like I don't mind waiting, but I want to wait fast, if that makes sense. Meaning, like, I want it to be over with fast. I'm the type that'll choose the route of intensity and quickness versus like the long and tiresome route. You know what I'm saying? Like, I'd rather be intense and get it over with. You know what I'm saying? So with that being said, let's hop into the video. So we don't even look at the daily chart, right? This the daily chart. This the higher time frame. You got the daily, the weekly, and the monthly. Monthly. We're not going to be looking at these time frames to depict what we're going to be doing. The highest time frame that we're going to go to is the 4 hour. And I'm going to tell you why in a second. Let's do that's ugly. Yellow. Let's do yellow. Okay, so this white line represents midnight, and this yellow line represents 6 a.m. And I know you're like, why you got 6 a.m.? Isn't that around London close time? Just hear me out. Just walk with me. You know what I'm saying? Walk with me. Okay, so here we go. Here we go, baby. So this strategy is all about getting in and getting out. You know what I'm saying? So we see. So first, let's go to we're going to go back to the hour 4 chart. It's actually a trade I took today. So look, so this is the hour 4 chart, right? We see that, so we want to enter. I look to enter my trades around between 6 to 7. You know what I'm saying? 6, 7. So I basically look at the previous candle before 6 o'clock. So basically, why 6 o'clock? Okay, so at 6 o'clock, based off the 4 hour time frame, at 6 o'clock, a new 4 hour candle opens. So we have midnight. We have from 2 to 6 a.m. is basically a 4 hour candle, and then at 6 a.m. a new 4 hour candle opens. So I look at, when 6 a.m. come, I look at the previous 4 hour candle. Based off of that, that's gonna tell me, you know what I'm saying, what I'm gonna be doing. So based off of this candle, that's gonna tell me what I'm gonna be doing. So I'm not gonna lie, I sold and bought today and made money both ways. I'm finna show you how. So when the previous candle is bullish, typically speaking, when 6 o'clock opens, I'm looking for a price to open at 6 o'clock, drop into this body around equilibrium of this body, and then rise up, which it did. Now on the 4 hour chart, this doesn't look like a big move, but trust me, baby, this is a very big move on a smaller time frame where you can make thousands of dollars. So I mark out these candles. I mark out the 4 hour candle before 6 o'clock high. It's the high right here. And I mark out the low. Right. And you can mark out equilibrium. So to get equilibrium, you just take the Fibonacci from the high to the low. You get equilibrium right here. Mark that bad boy out. Bam. So we got the high, low, and equilibrium. So when this price opens, we want to see it drop and then rise up, right? So we're gonna go to the entry. We're gonna go to the. I actually enter on the 1 minute, as a matter of fact. So my entry time frames is the 5 minute or the 1 minute. I believe I actually entered on 1 minute. So as you can see, this is at 2 o'clock. So this from here all the way to here is one candle on the 4 hour chart. And this is the high, the low, and equilibrium. right? So here we go. So at 6 o'clock, what am I looking for? I'm looking for, oh no, I traded Bitcoin. This US 30. But shit, it's the same concept, Okay, so look, here we go. So, as a matter of fact, no, I did trade US 30. Okay, here we go. My bad, y'all. I'm tripping. So we got this trend line right here. You see? You see that right there? You see how it touch, almost touch. So we got all these touches. We got all these touches touching on that body right there. Touching on that body. Say why they touching all on my body like that? You feel me? That's letting you know that the markets on the 1 minute, if anything, is in the uptrend. And remember what I told y'all? I told y'all when 6 o'clock opens, that previous candle, 4-hour candle, was bullish. So we're looking for price to open, drop. You always look for price to go the opposite way before going the way that you want it to. So since I'm bullish, I was looking for price to open at 6 o'clock, drop, and come into this area and then take off, which is this area right here is equilibrium of the 4-hour candle. Equilibrium is very important, you see? Equilibrium just means the middle point for the people who don't know. So I actually caught a sell because I was like, if it opens right here and I'm like, shoot, it's gonna come to at least equilibrium before reversing. Why would I just let price just come all the way to equilibrium? Like, why would I just watch it do that? I'm finna hop in on that because that is this. If this area is from here to here, is that, trade worthy? Yes. 49,281 to 49,187. Yes, that's a decent size move, especially if you got the capital to up your own lot size and have a decent amount of risk on the trade. That's $1,000. That's a couple of thousand. Even hundreds of thousands, depending on how much capital you got how much equity you got in your account. So basically, the strategy is this simple. Price was respecting this trend line, but then it broke it. So all I'm looking for is for price to break a trend line. So even though I'm buying, I'm gonna get to the buy in a minute. I'm gonna tell y'all, I just told y'all why I sold, because it was right all the way up here and I knew it was coming to equilibrium, so I might as well catch a sale. So I'm finna give y'all a sell scenario, then I'm gonna give y'all the buy scenario. So for the sell scenario, man, I pray to God I ain't talking too loud into their mic because I do not feel like starting the video over. But for the sell scenario, we basically look for the trend line to be broken. So it's a checklist. So you got trend line broken. Hold on, let me grab the checklist. Hold on, you guys. Let me grab the checklist. No, that's not it. Where is the... Here we go. We got the... There you go. Okay, so we got the trend line broken. It broke it right here. When I say broken, I mean it broke it and then it closed below it. So anytime I'm talking about a break, I'm simply referring to it has to break it and close. Like when it breaks it, it has to break it and close below the trend line. That is to me a break. That's a full break to me. You get what I'm saying? So right here on this candle, price broke and closed below, so it has to close below the trend line. My bad, y'all. My daughter making all that noise. I had to get up out of there. Okay, so what a thing, yeah, y'all. Okay, here we go. Broke and closed below that trend line on the entry time frame. Check. Just say that's a check. Okay, check. Broke A. So it's okay. So we broke and closed below. That's one check. So some people that just enter off that. I like to have multiple confluences. So I like to see a fair value gap for them. So I wait for a fair value gap. Do we get a fair value gap? Yes, we get a fair value gap right here. It's a small little fair value gap. So that's 2. Damn, why I keep doing that to myself? So that's 2 right there. Boom, boom, boom. Okay. Let me do it like this. Okay. So that's 2 checks. Do price. So some people would enter off of the fair value gap, meaning like when price closes below that trend line and then creates that fair value gap, they'll just enter on that third candle. The fair value gap is a 3 candle pattern. 1, 2, 3. Look, 1, this candle right here, that orange candle, that white candle, and that orange candle. 3 candle pattern. So some people would just enter when this third candle closes, the fair value gap is created, and they would just simply enter off that. So a fair value gap is basically just, so this is a bearish fair value gap, or they call it a BISI. It's a buy side imbalance, sell side inefficiency. So basically what that means is there is a imbalance in buyers because the sellers, as you can see on that big white candle in the middle, which is the second candle of the bearish fair value gap, it just shot straight down, and then on the third candle, it closed. The high of the third candle did not even touch the low of the first candle of that 3 candle pattern. So it left an imbalance. It left a fair value. So it's a fair value for sellers to get in the market. So that's all it is. That's all it is. It's like a signal for, like, if you want to sell that price, this area, and over here to my right of this area, you can see the prices. These prices are basically fair prices to get in if you want to hop on board to be a seller. So you have the fair value gap, boom, check. I like to wait for price to come back into the fair value gap. So did price come back into the fair value gap? Yes. Check. You can now sell. That's 3 checks. That's all we're looking for. We're looking for, and time of day. Time of day is between 6 to 8 a.m. Yes. So you got 4 checks. So you got time of day, 6 to 8 a.m. check. You got, did price break the trend line on the entry time frame? Check. Did price close when it broke it? Yep, check. Did price create a bearish fair value gap or bullish fair value gap, depending on what you're doing? Yes, check. And did price come into that? Yes, check. You can now sell. So for the people who need extra confirmation on top of that confirmation, I'm finna give y'all extra confirmation, bro. But too much confirmation, damn near the trade gonna be over. You get what I'm saying? So this, the extra confirmation, is basically changing state of delivery. So when you got this bearish fair value gap, right? You got these 3 candles. The candle price came back into the bearish fair value gap, right? So look, you take this, the body of the first candle before the push up. So all these 3 bullish candles, you take the body of it, of the first one, and you draw it across in time, right? I like to call this a change in state of delivery, right? So what does that mean? That means that when price breaks below this area and closes below it, which it did right here on this candle, on that white bearish candle, you can sell. That's extra confirmation. It's basically telling you price is changing the state of delivery from bullish to bearish. It's basically a bearish order block. That's all it is. So if you want extra confirmation, you can hop in right here. But as you can see, extra confirmation is going to pull you away from where you could have got in at up here. You know what I'm saying? So so we're going to do it like this. So let's say we're going to do both of them. So let's say you went short right here. When price came back into that fair value gap, boom, you went short. We like to put our stops above this candle, above the second candle's high or above the first candle's high. Whichever one you pick, you choose. It's up to you. I like to do the second candle's high right here. TP, we could just aim for a 3 to 1. Boom, we get it right there. What's that? It's like 3 minutes or something, 4 minutes. You know what I'm saying? But let's say we aim for that equilibrium. Like I was telling y'all, we aim for that equilibrium. Bam. We get a 17 to 1, guys. So And this is all valid. This ain't no unicorn made up trade. I just told y'all how I would have got in. You know what I'm saying? 17-1. That's risking $1,000 to make 17,000. That's risking $100 to make 1,700. That's risking 10,000 to make 170,000. You do the math. Basically, whatever you risking, multiply that times 17, and that would have been how much you would have made. And how much time? How much time, Bitcoin lunatic? You know what I'm saying? Shit, you would have hopped in at goddamn. You would have hopped in right here at 6:08, and you would have hopped out at 7:11. 6:08 to 7:11, what's that? That's an hour and 3 minutes. You get what I'm saying? So it would have took you an hour and 3 minutes to make 17 times what you was risking. Now, I don't know about y'all, but depending on how much you risking, shit, that could have been a trade for the rest of the month. You get what I'm saying? That could have been a trade for the rest of the week. You know what I'm saying? Let's say you risk it 1,000 to make 17K. And let's say you ain't never hit a 17R trade before. You was always hitting 5Rs and stuff and shit like that. And you can goddamn call it a week. Go catch you a flight to Miami. Go catch you a flight to Dubai, Puerto Rico, Hawaii, goddamn Maldives, Thailand. You know what I'm saying? Get the fuck on. Go have fun. Go spend the bread, because that's the whole point of trading, to spend the bread. Like, I had to remind myself while I'm doing this shit, like, bro, you not just making money just to hold on to it by the ball sack. You know what I'm saying? Spend that. You know what I'm saying? Spend that shit. What Future say? Spend that shit. Or whoever said that shit. Spend it. You know what I'm saying? Because you're going to die one day. So it's like, ain't no sense holding on to it. Now, be smart and allocate your finances properly and make investments on the side so you can never go broke, obviously, but spend the fucking money. Like, spend it on investments and spend it on yourself. Buy something that you always wanted. Ain't nothing wrong with that. Ain't nothing wrong with rewarding yourself for making money, bro. And stop thinking that making money is hard. Stop thinking that, because that type of mindset is going to hinder you from seeing amounts of money in your bank account that you never seen before. Because when you see somebody driving a Lamborghini or a Ferrari or a car or your quote unquote dream car that you want, you automatically think, oh, they work hard, or whatever they doing got to be hard. No, it's not. That's not always the case. Most of the time, people who make a lot of money, what they do to make a lot of money is actually very simple. It's just the application of knowledge. It's just like having knowledge that the general masses don't have, and they applying it at full speed. That's all it is. It's figuring out something and then just going crazy with it, basically. Like taking advantage of the opportunity. You get what I'm saying? So I want y'all to I just want y'all to remember that, man. I just want y'all to remember that. So that would have been a 17-1 in an hour, bro. 1 hour. 1 hour, bro. So let's take this off. And let's say you would have got in on that extra confirmation, which would have been right here on this candle with that orange arrow at. Let's say you would have got in on that one. You would have went short at the close right here, that extra confirmation candle. And let's say you would have put your stop loss up here or above the fair value gap. We're going to put it back in the same spot, aiming for that equilibrium. It would have been a 9 to 1. That's still good. You know what I'm saying? Most people, what they aim for, like a what? What y'all aim for? A 2? A 3? You know what I'm saying? 3 ball? There's a 3 ball right there. There go a 3 ball. Risking 1,000, you just made 3,000 right there. How many minutes? 1, 2, 3, 4. 4 minutes, you would have made $3,000 if you were risking $1,000. Come on now. Shit ain't rocket science. You know what I'm saying? It took me a while to get to this level, but now, you know what I'm saying, I'm finna elevate. I'm already elevated, and I don't got no choice but to keep elevating. You know what I'm saying? Because, like, what was hindering me from making money in trading was honestly being ignorant to, like, people like my mentor. I ain't gonna lie. I would listen to him, but certain shit I wouldn't listen. I would skip over a certain video, or I would listen to the video but disregard certain things that he talk about because I would feel like I quote unquote already knew it. Stop thinking you already know some shit when somebody who making way more money than you trying to tell you some shit. Listen, even if you think you know, listen, because 9 times out of 10, he is telling you what he telling you for a reason. Like a millionaire or somebody who making hella bread and you know what I'm saying, is looking up to them and you want to make the amount of money that they making, don't ever think for a second that you are, quote unquote, already know what they talking about when they say something about something that you feel like you know what they talking about. Oh, I already know about that. I already know about that. They may bring a new light to what you think you know about something that you already know. You know what I'm saying? Like, you can have 3 people and you can have them staring at the same object and they can all see different things. You know what I'm saying? They can see something that you can't see. So just because you and him staring at the same object, stop thinking that y'all see the same shit, because he probably sees something that you don't see, and he probably can see something that's going to help your trading, even though y'all looking at the same object. Come on now. Don't be ignorant to your mentor. Stop thinking you know everything. You get what I'm saying? Don't ever think you know everything. So look, here we go. All right. So that's on the bearish side right there. That's on the bearish side. So now we hit them with the bullish side. So the bullish side was right here. Look, we still between that time frame of 6 to 8. You get what I'm saying? So we sold right here. We got us our little 3 to 1 or whatever, or our little 17 to 1 if we aim for equilibrium. When price gets to equilibrium of that previous bullish hour 4 candle, we can expect for price to be bullish. This is all about expectancy. You know what I'm saying? That's what it's all about. It's all about expecting. Like, you can't, it's all about prediction and expectancy. Like, I expect this, I'm predicting this. You don't know for sure that it's going to happen, but you can make a pretty wild guess based off of data, based off of previous data and using common sense, honestly, like, if you want me to be real with you. So when price came into equilibrium, so what's the strategy? What's the entry, bro? We got a trend line. You get what I'm saying? Let's see how deep this go. Okay. So we got us a trend line right here. Right? So what do I look for? I already told y'all the checklist. I look for price to break and close above a trend line if I'm looking for a buy. So look, it broke and it closed above it right here on this orange candle. That's 1 check. Did it create a fair value gap? Yes. That's 2 checks. That's a fair value gap right there. Draw it up, draw it out. Did it come back into that fair value gap? Yes. So what do? Buy. Like, just press buy. Like, it ain't even nothing else to think about. Like, stop thinking. Do it. Like, stop. Oh, what else? Ain't nothing else. This it. You get what I'm saying? Put your stop loss under that second candle. I almost would have got stopped out, but as you can see, almost doesn't count, because even if I put it right at the low, it'll probably stop me out. But if I put price under it right here, or you could put it right here under the first candle. You know what I'm saying? Give yourself room. I like to put my jump under the second candle, under this second candle right there. Right? You aim for a 3 to 1. You in and out. I told y'all in and out. We're doing this all 2026. How long did this trade take? It consolidated mildly a little bit for about 5 minutes, and then it took off. So if you enter as soon as it came back into the fair value, you got right here 1, 2, 3, 8 minutes. 8 minutes for a 3 to 1. Risking $100 to make $300. You would have made that in 8 minutes. Risking 1,000 to make 3,000. Risking 10,000 to make 30,000. Risking 100,000 to make 300,000. You would have made that in 8 minutes. And obviously, price kept going up. So you're like, okay, what if I want to hold the trade and blah blah blah? You can hold it. Where's my target? Shoot, get out at the high. Get out at the previous candle's high. This line right here, this blue line, is the previous 4-hour candle's high. So if I draw it out in time, as you can see, we opened, we came down, we caught this sell right here, we came down, came into equilibrium of the previous 4-hour bullish candle. So we entering that, we touching that equilibrium of the previous bullish 4-hour candle, and you expecting for a price to go up. I mean, you have to aim for the previous 4-hour candle's high first. That's the first, like, area to get out at. You get what I'm saying? That's the first area. This the first area, bro. 8:37. You would have got in at 7:25. You would have got out at 8:37. That's an hour and 12 minutes. An hour and 12 minutes, and you would have made a 10-1. Risking $1,000, you would have made 10,000. Risking 10,000, you would have made 100,000. You get what I'm saying? Y'all do the math, bro. This shit ain't rocket science. And these are the big trades. These the 17-1s. These the 10-1s. You get what I'm saying? Me personally, I just like to get out at like a 4 or a 5-1. You know, but if I just have like a good week and then I place that trade, I'm like, okay, you know what I'm saying? I'm gonna hold this one. I can easily hold the trade and make, 10 times what I'm risking easily. You know what I'm saying? But I like to just get out quick. Like these trades taking the hours to pan out. And to some people, an hour is quick. But to me, an hour ain't even quick. Like to me, quick is like 30 minutes and under. Like if I can get in and get out in 30 minutes or under, that's what it's all about. And like normally aiming for a 4-1 or a 5-1, it'll put me in that space of, 30 minutes and under. So like, let's say I aim for a 4-1, right? Which is right here. Let's zoom in. Let's see how long it took. I would have got in at 7:25 and I would have got out at 7:34. You see what I'm saying? Like that's what I mean when I say in and out. That's in and out. That's a 4-1. That's risking $1,000 to make $4,000 in that small amount of time. Like that's nothing. And that's what it's all about. So this strategy shows itself every day, all day. And honestly, you can low key use any candle to do this strategy. Like you could just wake up at a random time and wait till a 4-hour candle finish. Once it finish, if it's bullish, you can look for buys on the next candle. And if it's bearish, you can look for sales on the next candle. And you could basically just follow the steps that I just gave y'all. See, originally, my strategy, you see this sale I took, that wasn't a part of my strategy. What I was supposed to do was wait till price got down here to that equilibrium and look for that buy because I was bullish. But I have a water mindset. You put water in a cup, it's going to turn into a cup. You put water in a bowl, it's going to turn into a bowl. So I have a mindset of like going with the flow. So it's like in my mind, if I know that when this 6 o'clock 4-hour candle open, it got to retrace. You know what I'm saying? And I'm basically catching that retracement because the retracement is big enough for me to make money because of the time frame that I'm entering on is so small. You understand me? So it's like when you trading on a smaller time frame, you're able to catch moves like this. You're able to catch a sell on a bearish day, on a bearish 4-hour candle, and then catch that buy that you was looking for originally. I'll be damned if I would have waited, if I would have just watched this junk go all the way down there and then enter for No, if I'm knowing that it's going there, I might as well hop on board. I don't care about like I know my bias is bullish, but I know what price has to do. It don't have to, but it's highly likely that when that 6 o'clock candle open, it's going to retrace. This was nothing but a retracement. But on the 1 minute time frame, it was a reversal. You see, it was a trend change. It broke the uptrend and then it reversed. But on a higher time frame, it was simply a retracement. You get what I'm saying? But the time frame is so small that you're able to hop in on it and catch big moves because each candle takes 1 minute to pan out. You get what I'm saying? And then look at what happens when you on board with the original trend or the original bias, which was bullish because of the previous 4-hour candle. You get a way bigger move. Like, I don't know about y'all, but if y'all got the tolerance to hold y'all trade this long, you know what I'm saying? You can hold that bad boy. As you can see, you wouldn't have got stopped out. You would have made your bread. Like, you wouldn't have got stopped out. Price wouldn't have. You could have, if you would have kept your stop loss at the same spot and just held it from 7:25 to 9:37, which is 2 hours, basically 2 hours and some change, you would have made a 41 to 1. Meaning if you would have risked $1,000, you would have made $41,000 in 2 hours. If you would have risked 10,000, man, y'all do the math, bro. This shit right here in y'all face, like this is US 30. You get what I'm saying? Like I ain't showing y'all no bullshit. I ain't showing y'all no fake, nothing. Like I'm showing y'all what it is. Like this is possible. Like people think like You can catch moves like this, but I want you to understand that trading is not about catching moves like this. It's about just making money and being profitable. Now, if this is your way of making money and being profitable, catching 41 to ones and 50 to ones and stuff like that, then do it. You know what I'm saying? Do what you want to do. Like, but me personally, if I was catching trades like this, like 50 to ones and 40 to ones, I would only just place one trade a week. I'm not gonna lie, I'll be honest with you. You get what I'm saying? Me personally, I just like to stay at that 5 to 1, 4 to 1 range, that area, and just get in and get out. You know what I'm saying? Get in and get out. But obviously, you can make way more money than that if you hold a trade. But I'm not gonna lie, I don't be trying to hold my trades at all. I don't even hold my trades over the weekend. Like, when it's Friday, I'm done. Like, I don't hold my trades over Saturday and Sunday and let it ride Monday. Nah, we ain't doing all that because I'm scalping. I don't even have to hold my trades that long. I place a trade and I close my laptop and I go to the gym or I read a book or something. Bro, by the time I read like 2 pages of that book or a couple of pages of that book, the trade is done, bro. The money is made. And that's what it's all about. You're basically buying time. All traders do is basically buy time. I'm buying US 30. I'm buying Bitcoin, but I'm also buying time because assets is time. Because if you have assets, certain assets, and you have that equity, you know what I'm saying, in your possession, that ownership of that equity, bro, that equity is basically a time buyer. You get what I'm saying? That equity is a time buyer. You're buying time. Like, people go to work and make $18 at a good job. We're gonna say people go to work and make $20 an hour at a good job. And we're gonna say, I'm not gonna lie, I'm kind of pissed off because I just did a freaking 40-minute video thinking that this shit was recording, and this junk wasn't even recording. Ain't a 40-minute video, y'all, and I go to stop the video and I ain't stopping nothing because it wasn't even recording. That junk just had me heated. So here we go again, man. Damn. So basically, welcome to the channel. It's your boy Bitcoin Lunatic. You know what I'm saying? AKA Brick, AKA Bitcoin Brick. You know what I'm saying? AKA Trading Genius. You know what I'm saying? Trading Master. You know what I'm saying? AKA Financial Advisor. You know what I'm saying? Now I'm just playing. I'm not a financial advisor. But we back with another video, man. 2026, man. It's finna be a very, very good year. A very prosperous year, a very abundant year. You know what I'm saying? A very peaceful year, a very, a year of travel, a year of seeing new things, a year of trying new things, a year of becoming a better person. And we're gonna do all that with this money. You feel me? We're gonna use that money and take that money and allocate it the right way to where we can live life. You know what I'm saying? And it all starts here. 2026. BTC, US 30, scalping strategy can be used on all assets. So basically, the whole year of 2026, we're not going to be doing nothing but scalping. I'm not going to be doing nothing but scalping. I ain't holding no trade longer than no 3 hour, no 2 hour, no 1 hour. You know what I'm saying? I'm holding my trades 30 minutes, 40 minutes, 15 minutes, 10 minutes. You know what I'm saying? Like, I'm not doing those 1 hour trades and stuff like that. I'm just keeping it scalping in and out. And I'm finna show y'all how. So I trade US 30 and I trade Bitcoin USD. So this trading strategy is super, super simple. Like, I'm giving it to y'all for free. What I'm finna tell y'all, bro, I'm gonna tell y'all right now, and I'm being, bro, somebody, any other forex trader will know I ain't bullshitting. Bro, what I'm finna tell y'all right now, people would charge y'all for this. Like, a lot of money. Like, they would charge y'all for this. Whether it's a subscription of $50 a month into their membership, or whether it's a one-time fee of $1,000 or $5,000. Bro, what I'm finna tell y'all, bro, people will charge y'all for this. So please take notes, and please do not take this video for granted, bro. If you a upcoming trader, if you want to be a trader, please do not take this video for granted. Please do not take the words that's about to come out my mouth for granted, bro. I'm blessing y'all, bro. I'm 27. I started trading when I was 16. I just now started making money. You know what I'm saying? I learned from ICT, aka Michael Huddleston, aka the mentor of your mentor. You know what I'm saying? I learned from Mamba FX. I took little its and bits of pieces from different people. You know what I'm saying? Shout out Lambo Rayul, shout out TT Trade, shout out Mamba FX, shout out ICT, shout out Casper SMC. You know what I'm saying? And the list goes on and on. Shout out Naveen Perthiani. You know what I'm saying? You know what I'm saying? These are the folks who I took something from, man, and made it my own, man. Let's get into it. 2026 scalping strategy. Can't go wrong with this one. Can't go wrong with this one. All right, so here we go. So this strategy is basically we use the hour 4 time frame as our higher time frame. So what I'm going to do is I'm going to mark out midnight. We're going to mark out midnight. Right? We're going to mark out 6 a.m. Right? We're going to mark out 8 a.m. So we got midnight. Then we got 6 to 8 a.m. So this area is where we look to enter from. This is new day, right? On the 4-hour time frame. Hold on, let me see. On the 4-hour time frame. So basically we're looking to buy. So we take the high and equilibrium of the previous 4-hour candle. So we look to enter at 6 because at 6 o'clock a new 4-hour candle opens. Right? So basically at 6 o'clock I go back, right? If that previous candle, 4-hour candle prior to 6 o'clock was bullish, I'm going to be looking for buys. If it was bearish, I'm going to be looking for sales. But let me tell y'all how I caught a buy and a sell today. So we got the open equilibrium of the 4-hour candle, and then we got 6 o'clock. So the entries, I entered on the 1-minute time frame. So here we go. So basically, essentially what I want to see is at 6 o'clock, since price is bullish, I want to see price open. I want to see it drop near to equilibrium or near it. It doesn't have to come to equilibrium. I just want to see price open, drop, and then take off the other way. It's that simple. Taking out that 4-hour candle high. So the strategy is this simple. So I caught a sale. I actually caught this sale right here, and I'm finna tell you how. So on the 1 minute, on the entry time frame, I draw the trend line, right? So right here, we have a trend line. So the checklist goes as follows. We have a trend line with multiple taps. It's a strong trend line. Price breaks the trend line, but not only does it have to break it, I want to see price break and close below it. So on this candle right here, price broke and closed below this 1 minute trend line. So there's one check. There's one check for a sell. So I knew that price was coming to equilibrium. So instead of me just watching price open at 6 a.m. on that new 4-hour candle and then just go all the way to equilibrium and wait for my buy and then take my buy in this area, I decided to catch a sale. Why not? That's a long enough trade to go ahead and catch a sale. So that's the first check, is the break and close below. The second check is a fair value gap. So we have a bearish fair value gap right here, right? So that's the second check. And then the third check is, did price come into that fair value gap? Right? And then obviously time of day is the fourth check. So is it between 6 a.m. and 8 a.m.? Yes, it's 6:10. So when price breaks that candle that broke and closed below that trend line, and then it creates that bearish fair value gap, and then it comes back into it, you can just simply sell right there. You can simply brush sell, and you put your stop loss above this second candle's high, and then you aim for 1-to-1, 2-to-1, 3-to-1, whatever, 4-to-1, 5-to-1. I typically like to aim for 4s and 5s, so 4-to-1, 5-to-1. but this trade panned out to a 17-to-1 risk to reward ratio. Okay, so meaning risking 1,000 to make 17,000, risking 100 to make 1,700. So for the people who like extra confirmation, if that confirmation wasn't enough, you have something called change in the state of delivery. So once price comes into this bearish fair value gap, you take all the up close candles and you draw out the first one, the first candle, the first up candle from all the up close candles that came into this fair value gap, and you draw it out in time. Right? Make that white. You're gonna make this change in state of delivery. So basically the change in state of delivery, once price closes below this level, we bearish. So that's extra confirmation to sell right here on this candle if price coming into this fair value gap isn't enough. You know what I'm saying? Change in state of delivery is basically an order block. It's basically saying that price is changing from the state of bullish to the state of bearish. That's all it is. And as far as this fair value gap, this is a bearish fair value gap. It's called a BISI, buy side imbalance, sell side inefficiency. So basically what that means is it was an imbalance in buyers. Buyers, it's a sell side imbalance, buy side inefficiency. My bad, SIBI. And buy side imbalance, sell side inefficiency is the other one. So sell side imbalance. So it wasn't no sellers, you know what I'm saying? Because price just shot through, and then on this third candle, the high closed right here, and it didn't even come to the low of this first candle. So it left a gap. So that gap, that's an imbalance. You know what I'm saying? It's a sell imbalance because it's a sell side imbalance because the sellers didn't get a chance to sell. You know what I'm saying? So what we're going to do is we're going to get the buyers to come back into this area. And now these prices, any price in this area is a fair price to sell. If you missed the first one, which was this candle right here, it's going to give you a second chance to get inside of this gap. It's called a bearish fair value gap. So if you take this cursor, this short, we went short. Let's say we went short right here. Like I say, when price came into the fair value gap, stop loss at the second candle's high. This trade panned out beautifully, guys. This trade panned out beaut. Look at that. 19-to-1. 19-to-1. And it didn't take that long. As you can see, it gave me that at about 7:11, and the trade was entered at 6:08. So that's an hour and 2 minutes. So an hour and 2 minutes, you would have made a 19-to-1. That's basically risking $1,000 to make $19,000. That's crazy, right? So that's one way, catching it to here. So when price gets to equilibrium, we looking for buys because that's our original bias. But, I'm like water, you know what I'm saying? Like, if I know what's going on, I'm going to take advantage of it. So, basically, that's why I caught this sale, because I knew price was coming to this equilibrium of the previous 4-hour candle. So, I was like, I might as well just catch that sale. I was up at 6 a.m. stalking this price right here. So, boom. Basically, for the buy, it's the same thing, just the other way around. You know what I'm saying? So, boom. We got the bearish trend line. We want to see it break, right? Price broke and closed above the bearish trend line right here on this orange candle. That's one check. We broke this high right here and created a bullish fair value gap. That's another check. We came into the bullish fair value gap. That's 3 checks. 3 strike you out. You go ahead and hit that for a buy. Stop loss. The low. TP at the top. That would have gave a 7-to-1. That would have gave a 7-to-1 in about, I don't know, let's take 725. 7-to-1 in about, okay, we got out at 8:38. Got in at 7:25. So it's about an hour and some change. An hour and a couple of minutes. 7-1, not bad. But like I say, I like to aim for like 4s and 5s. So we'll say we aim for a 4-1 right there. 7:25, 8:17. That's under an hour. So that's under an hour. It's like 40 minutes. We're just gonna say 45 minutes. You know what I'm saying? So a 4-1 in 45 minutes, that's not bad. I'm not trying to hold my trades longer than an hour. Not trying to hold my trades. I'm trying to be in and out. You know what I'm saying? Because the market can be very tricky, and the longer you're in the trade, sometimes the worse it is. But it depends on if you know what you're doing. But I just like to get in and get out just to get it over with. Right? So as you can see, if I would have held this trade, it would have obviously panned out even more, because price kept rising as we came into London's open, which was around 9:30. As you can see, it just kept on rising. So me getting in at London close is beneficial to me if I want to hold my trade into London, into New York's open. When that extra volatility come in, which is right here, I can just keep it on and ride on. You know what I'm saying? This gave me a 28-1 in a couple hours, but I didn't take this trade. I only got out at like 4-1, but I'm saying like if I would have held it for like an extra hour or so, I would have been basically up 28-1, meaning risking 1,000 to make 28K. You know what I'm saying? I don't know about you, but that's a decent trade. That's enough money to take off for the month. You get what I'm saying? Take off for the week at least. So that's what trading is all about. It's not really about catching these big moves. It's about making money. You know what I'm saying? So do what makes you money. Like this strategy makes sense to me because of the type of person I am. I'm kind of impatient. I'm not gonna lie. Like I work out and I read books and I meditate, but sometimes I be impatient even with my meditation. Like sometimes I be that nigga that be like, bro, when is this shit gonna be over? I'm one of them niggas. You know what I'm saying? Like when the food gonna be ready? You know what I'm saying? Like I'm that nigga. So I like to get in and get out. Like I don't like to be worrying about what's going on. I want to know if I'm right or wrong damn near immediately. Like, you get what I'm saying? Like, and this strategy that I'm showing y'all, you going to know if you're right or wrong very fast. Like, within 10 minutes, you're going to know if you're right or wrong. If price ain't going in your face, if you're not in profit in 10 minutes, you might well close the trade because you finna get stopped out. You get what I'm saying? The most, like, even on this trade right here, this buy, hopped in right here, 7:25 to 7:31. It consolidated, but at 7:31, it took off. That's 6 minutes. So 6 minutes, I knew I was in profit because look, that big old candle right there. Let me take this off. 6 minutes at 6 minutes, this candle formed, that big old orange candle, and then it closed. So after that, I knew I was green. I knew I was good. I was in profit. Okay, I ain't got nothing to worry about. It's gonna hit TP. You get what I'm saying? That's 6 minutes. Now, if 10 minutes go by and you still not in profit, you better get out of that trade. And that's actually a strategy that can help you make more money. It's like a preserving strategy, preserving your capital. If you're going to use this exact same strategy, as that same model, trading the 4 hour as the higher time frame, the 1 minute as the entry, bro, 10 minutes, bro. If your shit ain't done in 10 minutes, get out. By 10 minutes, you should be damn near at TP or you know, all the way in profit. And it's literally that simple. So on this day, this video was very beneficial to both of us because it was beneficial to me because I opened up my mind. Hold on. I opened up my mind even more by trading against my bias. My bias was bullish, but I sold. And I sold because I had confidence in my higher time frame analysis. You get what I'm saying? And then when it came down to this area, I bought. I bought because I had confidence in my higher time frame analysis. I knew that when price got near equilibrium of that previous 4 hour candle, that it was going to rise. And you like, how did you know that? Because Equilibrium is where all the work done at. That's the banks be buying at equilibrium. And they be buying at highs and lows. Like, that's where all the moves really be happening at. Highs, higher time frame, highs and lows, and equilibriums. Whether it's equilibrium of candles, equilibriums of price swings. Like, have you ever seen a price swing like go up? Like, it goes up, right? So let's take this price swing. It goes up and it comes right here. And I bring it out in time. Look at that. Equilibrium. You see at equilibrium, it came down a little bit and then it shot up. Well, that's because under equilibrium, you look for a PD array, which is the fair value gap or order block. Under equilibrium, you got a fair value gap. Boom. Fair value gap under equilibrium, and we in the uptrend because price took out this bearish trend line. That's a buy right there. You get what I'm saying? Like, it's plenty of ways to do this shit. It's like a continuation trade right there. You get what I'm saying? So it's like equilibrium is really, that's really all you need on your Fibonacci as far as like wanting to know when to enter. If you bearish and prices or has a bearish fair value gap above equilibrium, look for sales in that bearish fair value gap. If you bullish and price comes below equilibrium into a PD array like an order block or a bullish fair value gap, then look for buys. Be confident in your strategy. Be confident in your higher time frame analysis. You have to know that it's gonna work out. Stop placing trades and getting out before it's done. You know what I'm saying? Unless you've been in the trade too long. You know what I'm saying? Unless you've been in the trade too long and you what you call it? I forgot what I was about to say. Unless you've been in the trade too long and you just know that you finna get stopped out because it's been over a certain amount of time. You get what I'm saying? Sometimes it's best to use timers as stop losses. Like, have a stop loss on the chart, but also have a timer as well. So like, I have a stop loss on the chart, meaning if price comes to this area, it's gonna stop me out no matter what. But I also have a timer stop loss. So it's like, even if I don't get like, let's say my stop loss is at $100. I'm risking $100. That's how much I'm willing to lose. But let's say 10 minutes go by or 15 minutes go by and I'm negative $50. I'm going to just get out the trade because 9 times out of 10, it's going to come and stop me out at that negative $100. So when I get out that trade at $50 because it's been 15 minutes, 10 to 15 minutes, and I ain't in profit, bro, every time I come back and look at the chart, it's like a 95% chance that it went to where my stop loss was. You get what I'm saying? So I'm basically saving money on trades that are not good, basically, or that I wasn't going to make money in anyway. And that's what it's all about. You only want to trade the best setups. You only want to trade A+ setups. And even when you trade A+ setups, you are still going to lose money. There are going to be some times where everything marks off your checklist for your trading strategy and you're still going to lose. That's a part of the game. That's why it's called risk management. That's why it's called money management. You have to manage your risk. You have to manage your lot size. You have to manage your capital so you can be able to live to trade another day. And that's what it's all about. It's all about living to place another trade. It's all about having discipline and knowing that your strategy will come around again. Just because you've seen everything pan out on your strategy and you took the trade and you got stopped out, that does not mean the next time that you see everything that your strategy consists of, that doesn't mean hesitate. That doesn't mean be scared. That means have confidence and know that it will pan out. It's an overall concept. It's not a trade. It's not a one trade concept. You have to have an overall concept. Like, if I see my trading strategy 10 times, you know what I'm saying? I know out of those 10 times, at least 7 times it's going to pan out in my favor. You know what I'm saying? And that's what it's all about. Don't get discouraged when you lose if you done made money using a strategy before. If you done made money using a strategy, or if you make money using this specific strategy that I just taught y'all today, right? And you killing it, and then you take 3 losses in a row, that does not mean the strategy don't work. That does not mean that you don't know how to trade. That just simply means that that's just what the market's doing. Like, it's a part of the game. Like, you're not gonna get every single trade right until you die. And that's what some people think. Like, some people want to get every single trade right until they die. Some people don't want to lose no money. But you got to lose money to make money in trading. You have to lose money to make money in trading, but make sure you're losing money correctly. Yes, make sure you're losing money correctly. Make sure you're losing money the right way so you can stay in the game. How do you lose money the right way? By losing money to A+ setups. It's that simple, man. It's my 2026 strategy. It's your boy Bitcoin Lunatic. We out. What the fuck? Why this shit ain't working? Oh man. Oh, there we go.